Welcome to Under One Roof FTL, where we are demystifying home ownership 1 week at a time. My name is Robin Flynn, joined as always by Martin Spalding and Fred Bichette of Fred and Martin Mortgages.
Easter Sunday. Did everyone get their chocolate?
I did.
LJ Aguinaga of LJ Realties. LJ, was the Easter Bunny good to you?
Easter Bunny's always good to me.
Awesome. Let's start with our trivia question of the week so I don't forget this time. Last week, we only got to it in the second break, so I'm going to make sure that we get to this. It's brought to you by Felix and Norton Cookies. You can visit their store at the Blue Haven Shopping Center, 3705 St. John's Boulevard in DDO. If you think you know it, 514-790-0800. Text us with your name and the answer. The first person to text in the correct response will receive delicious cookies from Felix and Norton, delivered straight to your door. Our question this week: what is the penalty for breaking a fixed rate mortgage before the term ends?
Oh, good one, Robin.
If you listen to the show, we talked about this in great detail a few weeks ago, so you should know this one. 514-790-0800.
I could add, Robin, that it is the biggest complaint in the mortgage industry, the penalty from the banks.
And it's calculated differently by each lender.
Definitely something you want to read when you sign your mortgage.
Yeah, read the fine print.
Yeah, very important to do. I've learned from you guys that the interest rate is not necessarily the most important number on your mortgage.
You know, I hear that day in, day out from my partner, Fred Bichette.
Okay, busy week, guys.
Was it?
The Bank of Canada announced that it was holding its interest rate this week. Was anybody surprised by this announcement?
Well, I was kind of surprised. So, you know, I'm humble enough to admit when I'm wrong. And on last week's show, I was convinced that we were going to go down by 25 basis points. But, you know, let's face it, things are really messy right now, especially with the U.S. changing its trade policies on a day-to-day basis. It's causing a lot of confusion, a lot of uncertainty. I think the word of the year when we look back on 2025 will be uncertainty. So I think the Bank of Canada took the decision. Let's wait and see how this plays out before taking another decision. There are two things that are working against each other, and we talked about it a little bit last week. On one hand, business activity is slowing down. So when slowing down, the Bank of Canada usually brings down their interest rates to stimulate the economy. But on the other hand, new costs like tariffs and supply chain issues are driving up inflation. So I think that's where they're juggling on what to do. And when you're not sure what to do, you do nothing. And that's what the Bank of Canada decided to do this week.
But inflation was actually down a little bit for the month of March, was it not? It was down to 2.3%, I believe.
I think it was
Yeah.
2.4, and it was down a little bit, but it's still higher than their target 2% rate. And with all
Yeah.
the uncertainty, I think unless we're below 2%, and even the last couple months where we were below 2% was the kind of sheltered without the GST taxes that we had, which is what got us there. So I think they're just treading lightly, being careful, avoiding having to make any decisive moves or strong changes in the market the next couple months, and just letting the dominoes fall. I mean, we saw the roller coaster that was the stock market 2 weeks ago. I think they just want to wait and see how things are going to play out and how the market's really going to react longer term to what we've been seeing in the market. And from there, make a bit more of a decisive move. At the end of the day, if they want, they can make a 50 basis point next announcement, right? It just delays things for about 6 weeks. So we'll see.
I totally agree with Halsey. I think they just postponed the rate cut for the next announcement, and I think we're going in that direction. And I think when you look at it, it was a good decision to put a pause right now, just to see what happened.
The next rate announcement, I shouldn't say rate cut announcement, is June 4th. A lot can happen in 6 weeks, right? Like we can speculate now, but Trump could reinstate tariffs. Who knows what could happen at this point? So
You know, it's funny because they were talking about it. So he's put a pause on tariffs for 90 days, right? But I think this week he's only been in office for 88 days. And look how much has taken place in 88 days. It's amazing what could happen in the next 90 days. So I guess it's a wait and see. But I agree with LJ and with Fred. I think by year end, we'll see more rate reductions from the Bank of Canada.
question for you. A friend of mine bought a new car this week, and the justification she gave was my car. I think her car was like 15 years old. She was like, it's going to die soon. It has like 250,000 kilometers on it. She's like, I'd rather buy now while things are still somewhat stable then need to buy 6 months from now and everything is insanely expensive. So I'm curious what your advice would be as it pertains to housing on this front. We don't really know what to expect with the economy, with inflation, with interest rates. Things are a little uncertain right now. Would your advice be to buy now while we still know what's going on?
At the end of the day, we don't make decisions based on what we're hearing and speculation. For real estate, we make decisions based on your family's needs. So I always tell people forget about the noise of what's happening in the market. If you try and time the market, you're not going to win. If you're looking to buy a house because your family needs a new home and you want to get into the market, then it's a great time to get into the market. Interest rates are lower than they have been for the last almost 3 years at this point. We've seen active listings decrease in the market, as we're going to get into in a little bit. So it really comes down to what does your family need, and let's try and block out some of this noise, because no matter what real estate investment we get to, I tell everyone you need to have at least a 5 year runway of your expectation of holding this property. So as long as you're holding for 5 years, what Trump does in the next 90 days or even 6 months isn't going to have a significant impact to where the market's going to be 5 years from today, realistically, because we're going to bounce back. Whatever happens in the market's going to go up and down, but it'll be in a completely different place. So long as your family is looking to buy a single family home, a condo, even a multiplex to utilize it as a principal residence or to get really value out of it, then you're in good shoes. And even if you buy a multiplex and let's say the market were to go down by 10%, which is what we saw in 2022 when the interest rate spiked, if you're holding it for another 2, 3 years, it's going to bounce back. It's going to recover. You're going to be in great shape at the end of the road anyways. So let's try and block out some of this noise because we can't predict that. And we have to go back to focusing on controlling the controllables.
I like that.
Because I'll jump in because we're seeing that the overall market is slowing down. I know that Quebec is different, but when people feeling are unsure about the future, whether it's about their job, their investments, well, I mean, everyone took a hit when the stock market went down, or inflation, they tend to hold off on big purchases. So, like homes or cars or whatever it may be. So we're feeling a lot of people are hesitant. But I agree with LJ. You know what? If you need a home, you need a home. And it's not about, and you've heard me say it 1,000 times, it's not about timing the market, it's time in the market. So get into the house that you want and hold on to it. Because I also agree that, 4 years from now, we could be in a whole different situation. And usually you buy a house for the rest of your time. So it's a long term investment, and long term real estate has always been a good investment.
Well, you referenced it there. Canadian home sales had their worst March since 2009. However, Montreal's home sales have climbed. What I read was 12% for the month of March. So, what is making Montreal and Quebec so different from the rest of Canada? It's like we're our own little country.
It's the Quebec effect. We've always been insulated, which means we have less of the highs when the rest of Canada is doing great, and we have less of the lows when the rest of Canada is really hurting. And it's really given us a lot more stability, which has been awesome because it's been a lot more predictable in that sense. Now, again, we're always at risk of a referendum. We're always at risk of something kind of major really bringing a negative cloud over us. But the reality is, over the last, 17 years, as long as I've been a realtor, we haven't had too much pressure from that. Therefore, right now, we're seeing the fact that people are excited about housing. Interest rates are down. People need housing. Where we lack supply. We are an island at the end of the day. We don't have much more space to start building on our island. So we're really expanding our horizons outwards. And all of this new building takes time. So we've got a lot of immigration that's come into Montreal or even Quebec as a whole over the last couple of years. And we need places to house these people. And that's really what we're seeing right now. It's this classic supply and demand that we've been talking about for the last 2 years. But now that interest rates are down, people are excited to do something about it.
If you've got supply or you have a demand to purchase a property, LJ is the person that you want to call. LJ Aguinaga, 514-500-4040 will help you decide what to do. Still to come, everything you need to know to prepare for your mortgage rule. But right now, we're going to check in at the CJD 800 Traffic Center.
Are you facing the sticker shock of higher rates at renewal? This is your Mortgage Minute. Is your mortgage up for renewal? Are you feeling the sticker shock of today's higher rates? Well, you're not alone. The good news is you do have options. You could renew as is or refinance to lower your payments by extending your amortization. Some owners are choosing shorter fixed or variable terms to ride out the current rate cycle. The key is to plan ahead, understand your numbers, and choose the strategy that fits your budget and goals best. By planning ahead, it could save you thousands and make your mortgage moving forward much more manageable.
This is Under One Roof MTL on CJD 800. I'm Robin. That's LJ. That's Fred. That's Martin. We are with you until 1 p.m. on this Easter Sunday. So your mortgage is up for renewal. Now what? There are 7 smart questions that every single homeowner should be asking before they sign anything. Now, Martin, I need to know, what is the number one question that a homeowner should ask before they sign a mortgage renewal?
Well, before I answer that question, Fred and I put together a checklist. So, if you're up for renewal, the things that you should start considering to do. First thing, start early. So, mark your renewal date on your calendar, in your calendar, so you know when your actually mortgage is up for renewal. Understand your renewal offer. Did your current lender send you a renewal letter? Compare this offer to current market rates. Shop it around. Check rates from other lenders. Don't just accept what your current lender is offering you, because often it's not the best rate you can get in the market. Get your documents ready. Sometimes when Fred and I start engaging with a client, we say, well, we need your letter of employment, we need your T4s, your T1s. And they say, what's a T4 and what's a T1? Get those documents ready. Decide between renewing and refinancing. And we'll talk about that a little bit later, but that's an important question to ask yourself. Um, are there payment relief strategies? So before renewal, what can you do? Should you make a lump sum payment so that when you renew, your principal will actually be lower? Should you consider extending your amortization? Because if you're being hit by a higher rate than you're currently paying, that means your payments are going to go up. But if you extend your amortization period, you can actually lower your payments. On the life of your mortgage, you'll end up paying a little bit more interest, but in terms of cash flow, it's something that you should consider. Should you switch to a variable rate? Because we just talked about it. If we think that mortgage rates could go down or the overnight rate could go down, that could be a way to gain the system. Should you consider a shorter fixed rate mortgage so you can reassess in 1 or 2 or 3 years instead of locking in for 5? And then obviously, I'm going to talk for my paroisse. Get help, call us. It doesn't cost anything. We'll run the numbers for you and we'll find the best strategy for you, whether it's renew or whether it's refinance, and we'll shop your mortgage around to see what the best potential offer is in the market for you. So, and it doesn't cost anything. Just give us a call. So, if you want to know what the first thing you should do, um, start early. That's the first thing you should do. Don't wait till the last minute and feel the pressure of your renewal date approaching you and having not taken a decision. You may have to keep your mortgage open, and an open core mortgage can be a very costly thing. What's wrong with starting 6 months ahead? And we could actually probably renew you 180 days before your renewal date. So, if that date is approaching, then get busy and give us a call.
Fred, if you're choosing to refinance or renew your mortgage, 2 separate situations, do you need to pass the stress test?
Well, obviously, Robin, if you take the easiest way just to renew with your bank, you do not have to repass the stress test. However, uh, even though you don't have a lot of needs, let's say you're comfortable with your mortgage payment right now at 2.5%, and your mortgage come to renew in June, July, August, it's really worth it to give us a call. Why? Because I'll give you an example. If your loan to value, let's say you own $250,000 on your property, and the value is 500, you're basically at 50% loan to value. It's worth the try to get a better rate with a better loan condition with another lender. Why? Because I don't want to get into too much details, but we're under 65% loan to value. We have access to unsurable rate. What that mean? That mean we could get an insure rate when you made a purchase with less than 20%, and low or lower than 65% loan to value, we have access to the best interest rate. At the end of the day, that could make you say thousands. Like, it's really worth it to look at your option. Most of people, they don't know about that. They call us. I got a call this week. Someone says, My mortgage is for renewal. My bank offer me this. Do you think it's good? The first question I ask them, what is your value of your property? All of a sudden, I figure out that it was at 50%. I says, listen, let me work the number for you. I guarantee you I get you a good deal. Like at the end of the day, it could be really worth it, especially when you go from 2.5% right now from COVID time to a potential 4 or low 4 or under 4. It's worth it to make the try.
A lot of the time, I've received this comment, and people say, "LJ, I just didn't want to waste your time," and I'm sure Fred Martin getting all the time as well.
Oh, no, that's
Um,
not a waste of
and
time.
and that's what I want to hammer down right now is that there is no waste of time here. Our jobs as professionals in the real estate industry is to make sure that you're getting the best deal possible and make sure that we're presenting you all your options. So to be quite honest, I want to make sure that nobody gets stiffed by their banks because they didn't take the time to go get educated, go get more information, go find out what else was out there. So please book a call with me, book a call with Fred and Martin. We're more than happy to walk you through what your options are. And more times than not, there's a solution that you've never heard of before or that you weren't aware was an option for you that's going to be significantly better than what's been proposed to you. So please take the time to reach out so we can help guide you. And there's no cost associated with that.
Just a quick comment. If I know one thing about my partner, he loves to help. And I hear him day in, day out giving out free advice, and he doesn't expect anything in return.
To find out more about what your options are to get in touch with Fred and Martin, go to their website, fredandmartin.com. Their numbers are there. You can book meetings with them directly and you can yap their ears off. They absolutely love it. Coming up next after the news, we're going to debunk some terrible mortgage and real estate advice that I've seen going around on social media. That's coming up next. This is Under One Roof MTL on CJD 800. I'm Robin Flynn with LJ Aguinaga of LJ Realties, Fred Pichette, and Martin Spalding of Fred and Martin Mortgages. If you've spent any time on social media, you know that there can be a lot of questionable advice floating around on pretty much every subject, and real estate and mortgage are included in that. I have seen some myths that have gone viral lately, and I thought, who better to take these myths to than LJ, Fred, and Martin so they can give me the actual information and we can pass that information on to you. The first one that I saw online was that you can buy a house with zero income. You just have to say the right things. And I feel like that's probably terrible advice. You need to have a steady income that is provable, correct? They're going to want to see documents, which I think is Martin's favorite word.
Absolutely have to have an income, and your income will be verified. And it has to be supported with documentation, letter of employment, pay stub, T4s, T1s, bank statements, business financials. Um, because let's face it, with AI, it's easier than ever to forge documents, and lenders know it. And that's why they're tightening up their verification process in a major, major way. They're actually using AI to verify your documents. And one thing a lot of people don't realize is that they're going to call your employer. They're going to call the person that signed your letter of employment to validate that you're gainfully employed at the company whose letterhead is found on your letter of employment. So don't try to pull a fast one because you're going to get caught. And if you get caught, it's fraud. And, it could lead to a criminal offense. So just be careful, and you do need an income to be able to buy a house.
It's funny, Martin, what you say, but before 2018, there was a few product out there that we could kind of verbalize an income. Maybe that's what the people refer to. We call that an equity program. I remember that Manulife has that, Banque Laurentienne as well, with the loan to value at 50% and less. There was no income verification. Uh, that maybe when people says I did qualify with very low income with no income, but that was a specific product that's not available anymore. Not really. And actually, if you don't have a lot of income, you need a big asset to qualify. But anyway, yeah, it's better to have a proven income.
Another one that I saw was only suckers pay down their mortgage. You should invest instead. And I know you were talking about buying against investments and stuff like that on social media this week, LJ. So why don't you take this one? Should you pay down your mortgage or should you use that money to invest?
Look, There's good debt and there's bad debt. As long as you're growing your portfolio, you're making smart moves, you have the right knowledge base, you've done the research, you've done the due diligence, then I am personally okay with taking on a bit more debt at the lower rates that you can get with your mortgages to search out a return on investment that's 6%, 7%, 8%. I mean, whatever that might be, right? So there is an arbitrage opportunity. I don't say this lightly. I don't say this, oh, yeah, of course, just take on a larger mortgage, invest in anything, you'll be okay. Everything is rosy and rainbows and all that. That's not the case. Not at all. But if you are somebody who is okay with more risk, who is okay with having to make the payments on this if the things turn down on you for a little bit, you're okay even potentially losing those funds, then that's an option available to you. And obviously, when interest rates were super low, if you could take on a mortgage at 3% or 3.5%, and you could put the money into the market that's returning on average, I think, of 7 to 9%, then there's an easy arbitrage opportunity there. But again, there is no free lunch. You have to be prepared for things to turn on a dime and to be able to make these moves and cover those costs. So it is a sophisticated tool. It is we'll call it a high level investment maneuver that you can do, but it's available to you. And instead of not having anything growing, because once you've paid off your property, obviously you're taking the appreciation, but that's it. There's no other growth on that investment. There's other options of diversification.
I was going to jump in because exactly what LJ just said. Can you afford to lose that money? Because when you put money into the market, it can go up just as quickly as it can go down. So gambling with your principal residence isn't always always isn't always wise. So just be careful because you could end up worse off.
Another item that I saw on social media, maybe I'll take this one to Fred, was that you don't need a credit score to get a mortgage. You not only need a credit score, you need a pretty good credit score to be able to qualify for a mortgage, right, Fred?
Yes, but I would surprise you. If you're a newcomer in Canada, you don't really have a credit score. Let's say you come from Mexico or from Europe, you don't really have an Equifax score here in Canada. If you come from the state, you do. But if you're a newcomer to Canada, sometimes you don't have a credit score. Obviously, I keep saying to my client, to her client, that the first thing a lender or a bank look at, it's your credit, who I'm dealing with. Do I'm dealing with a AAA credit user or with a delinquent user? And that's something that we cannot really, what we could help, but we cannot really change in 30 days. Which is, yes, you need to have a decent credit. Let's say that people say 650. I like to say 680 and up. It's a decent credit. Obviously, if you're over 900, you only 3% of the population who has that, over, sorry, 800, you only 3% of the population who has a credit score like that, which is not a lot. But if you're 680 and up, you're good to go. But again, if you're a newcomer, there's another way to qualify you. If there's newcomer that listen or show, if you're here for 6 months or 9 months, you do pay utilities, you pay rent, you probably pay yourself, which is yeah, it's a possibility, but for a very kind of people for newcomers more than anything else.
Yeah, we had a client this week. Great job. Had the down payment. Everything was good to go. He had an accepted offer. I don't know who pre-qualified him, but they certainly didn't pull his credit report. And when we pulled his credit, it was in the 400s, and the whole deal just imploded. No one wanted to touch it. We called absolutely everybody, and there was a mistake at Equifax. There was a mistake on his credit report, which imploded his credit score. So again, it's really important to pay on time and do a yearly audit of your credit to make sure that there aren't things on your credit report that can't be fixed before you go down that road. He was so disappointed, and we were dumbfounded. We couldn't believe what was going on because here's a very successful guy, but there were a couple of issues in the credit report that just imploded his credit score, and the whole thing went by the wayside.
It's always an old cell phone.
Exactly. That was one of the things. It was an old cell phone.
Yeah, check your credit. You can sign up with like Equifax and TransUnion just as a regular person. You can sign up and pay monthly to have access to your credit report and credit score directly through them. Don't do Credit Karma or any of those weird websites. Go directly to TransUnion and Equifax so that you are seeing what the banks are going to be seeing.
Look at you, Robin. Look at you.
I, really, really hard at repairing my credit for years now, and I pay for Equifax, so I pay very close attention. No one could steal my identity. I would know immediately.
You also have to be careful with the Videotrons and the Bells and so cell phone providers are a big one, but in recent years we've seen Videotron come into the market. These weren't always reported on your credit originally, and now they become more and more commonly reported. We had a case recently where somebody had paid something off. I think there was a balance of like $53 on it, and it was on there, and then Videotron had made the mistake. So it's really just a question of calling them up, confirming that they'd made the mistake, getting the letter so that they could rectify it, so we can get a final approval on this deal in particular. But a lot of the times it's trivial things that could have been dealt with not on the last minute of the last day before the deadline expires because we didn't know better effectively. So do that due diligence.
Yeah, I would say just to add to that, you should look at your credit every 6 months. Go on your credit report, look at it. It's everything is seems to be accurate, and that's the best way to avoid that.
If you are ready to take the hassle out of property management, you've got great credit, you are ready to buy a multiplex, but you're like, I don't want to worry about actually handling the day to day management of this building, give Plex Doctor a call, 514-709-6397. You can also visit the website at plexdr.com. Coming up, our property of the week plus the answer to our trivia question. We'll find out after we check traffic. This is Under One Roof MTL on CJD 800. I'm Robin. That's Fred. That's Martin. That's LJ. We are with you until 1 p.m. Our property of the week. LJ, what do you have for us this week?
This week, I'm bringing you over to Griffintown. Are you looking for modern luxury in the heart of Griffintown? Welcome to 1400 Rue Ottawa, apartment 828B, a sleek one-bedroom, one-bathroom condo with stunning city views, listed at $430,000. This stylish top-floor unit features floor-to-ceiling windows, an open-concept living space, electric blinds, and a private balcony. The kitchen is modern and functional, and the bedroom includes a spacious walk-in closet. Enjoy next-level amenities, including a gym, a rooftop terrace, an outdoor pool, a concierge service, plus you're just steps away from the Lachine Canal. Top-of-the-line restaurants, cafes, and downtown Montreal. Urban living does not get better than this. Reach out today to book your visit.
Oh, I love Griffintown. It's so cool now.
I love electric blinds.
Those things are sneaky expensive.
I know, but it's so cool. You sit in bed and lower, raise. You feel very James Bondish.
Blinds and window treatments in general are expensive. Martin always talks about saving money for your lawnmower and your snowblower. You need to save money for curtains, and it's not just for aesthetics. Like, if the sun is beating down into a room in the summer, even if you have HVAC and AC, that room can heat up awfully quick. So,
Just so you know, Robert, we had a client call yesterday, Fred and I used the ironing board. Remember, you got to buy an ironing board. And she got it right away. He got it right away. So
yep. Thankfully, I received an ironing board as a bridal shower gift.
there you go.
Period. So I did not have to buy an ironing board. Okay, let's get to our trivia question of the week brought to you by Felix and Norton Cookies. What is the penalty for breaking a fixed rate mortgage before the term ends? The answer is the greater of either 3 months worth of interest or the interest rate differential. If you go check out the podcast, you can listen to a detailed explanation of what the interest rate differential is. We did it, I think, 2 weeks ago here on Under One Roof MTL. Martin explained it fantastically, so you can get more information on that if you're interested. But it's important to know what those penalties are, right? Because if you're going to be breaking your mortgage, what's the stat, Fred? How many people end up breaking their mortgage?
It's 7 people out of 10. And you know what? You talk to people, no, I'm not gonna break it. I'm not the kind of person, and usually they are the first one to break it. Like that's why it came back to a mortgage. It's about a good lender, good loan condition, and a competitive rate. That's so important.
Absolutely. We learned a lot on this show this week. I always learn a lot on this show. We learned that the Bank of Canada decided to hold interest rates this week. The next announcement is scheduled for June 4th. We will be on top of it, of course. We also learned that you should avoid taking advice from unqualified people on social media. Stick to the experts. Follow LJ on social media. His content is fantastic. You're going to want to follow him everywhere. Speaking of which, LJ, where do people go to get in touch with you and follow you on social media?
You can always check out our website, ljrealties.com, on all socials with the handle LJ Aguinaga. That's LJAGUINAGA, or LJ Realties with an IES at the end. You can also call or text me at 514-500-4040. And if you're looking to free up some of your time, contact my property management company, Plex Doctor, to take over and give you back your time. Real estate is a very lucrative investment, but it is time consuming. And if you truly want to make it passive, hand it off to a property management company like ours. You can find us at plexdr.com, or you can reach out at 514-709-6397.
Fantastic. Fred, Martin, where do people go to get in touch with you?
So we talked about it during the show. So if you're up for a renewal, should you renew or should you refinance? You don't know the difference? Give us a call. You can get in touch with us through fredandmartin.com. You can reach us through fredandmartin.com, or you can even book an appointment through.
Fred and Martin Daka?
That's right.
Perfect. That's pretty much it for us for this week. We will be back next Sunday at 12 p.m. right here on CJD 800. In the meantime, if you want to learn more about the guys and the show, you can visit our website at underoneroofmtl.com. If you missed anything, you can listen to this show in its entirety on the iHeartRadio app. It's also on Spotify, Apple, wherever you get your podcasts. For LJ, Fred, and Martin, I'm Robin. Have a wonderful Sunday.
Thanks, Robin.
Happy Easter.